Okay. Peter Rose, Longwood Currency Trading. Volatility is good, but excessive volatility is not good. I'm going to put up a slide here that's a pound dollar 5-minute chart. And you can see that in about, almost just a little over 5 minutes, that price has spiked down so far as 107 pips. 107 pip movement on a daily chart would be okay. On a 4-hour chart, you might say, well, I don't know, that's getting pretty rambunctious. On an hour chart, that's crazy. But on a 5-minute chart, I mean, what's going on here? Now, you could say, and I've said in the last few videos, where I've used volatility to my advantage to make up a $24,000 loss that I had suffered because I was stupid and forgot to pull off a limit buy order for a short position that I closed out early, and it went against me, and I had to close it out at a $24,000 loss. And that was a rapid decline as well. That was a lot of volatility. I wish I would have been on the right side of that, right? But I wasn't. So I had to work my way out of that. And because I sensed that there was a lot of volatility in the market, a lot of momentum that I term it as, I was able to place some orders that had far out stops. I backed up the truck and loaded it in. I staged them in four cohorts, and ended up with almost a $27,000 profit as that movement was fulfilled. Now, the $27,000 was not a result so much of the volatility. It was simply a result that I had backed the truck up and loaded a lot of money behind it, and was able to take advantage of the movement in order to make that much money at $250 a pip. But this slide that I'm showing is excessive. Five minutes and you get 107 pips. Well, the question is, what causes that, right? Well, the cause, we're not going to be able to figure that out. It's an economic event that's happening. The most likely scenario is that a large institution, with that price rising the way that it has, and it was rising normally in reaction to the rather significant movement that price had gone down with, which I was able to take advantage of. But at some point in the currency market, 50% of the people are wrong and they're closing their positions. That's what causes the movements to happen. And so you have these retracements, which tend to be 50% or whatever that drop was, because you're picking up the guys that lost are calling it quits when the pain threshold overpowers them and they just can't take it anymore, and they just get out. That's what causes the radical retracements that we see sometimes. And so you can look at maybe level 2 to see where all these orders are and stuff. And if you're an institutional trader, you can kind of foreshadow that particular kind of thing is going to happen, and you can react against it with more money than the retail market is going to be able to bring to bear on it. I mean, the retail market is big, but it's only 15% of this $7 trillion a day market. And so when you're trying to fight the big boys on price action, you're not going to win. That there could be a large institution that has a huge client order, and the client said on this particular pound dollar chart, oh, we're not going to pay that much. We're not going to pay that much for well, in that instance, they're buying pounds and selling dollars. We don't want to pay more than X amount. So when price gets to X amount, the institution says, well, we're going to have to sell the crap out of that really quickly and flush out all the stops, and then we'll buy it all back, and we'll work our way back up, and our customer will be happy because this $6-7 billion order was executed at the price that he needed it to be executed at. It's commerce. Because you can have all the level 2 information that you want, but you don't know what that guy's order book is. So to try to trade with the news or on level 2 or all on that stuff, you can't. And the folks that were institutional traders, and they're trying to get out there and teach you how to trade the way the institutions do, is crazy, because you can't trade like the institutions traders at a large institution. All they do, for example, is buy pound dollar or buy Swissy, or all they do is buy it. And these guys buy this stuff and they hold it. So when someone needs to sell a bunch of it, they've got it. Well, how do you trade like that as a retail trader with your 3 minis or 10 full lots or 40 full lots? How do you compete with that? How do you trade like an institutional trader? And what good does it do to think like an institutional trader? Well, you damn sure don't want to think like a retail trader, because 90% of them are out, are losers. They're going to lose. And they're either losing because they don't know what they're doing, or they're losing because they're trying to trade like an institutional trader, or they're losing because they're just stupid. So how do you trade? You trade like you need to trade as a single, small ticket retail trader. And how do you do that? Well, that's why we have consulting. That's why I have a course. It's a process that you learn. And you don't learn it in 15 minutes. You don't learn it by reading a book. It's a collaborative process that you need to go through, because all of our personalities are different. Most educational sources they think they're mitigating the differences in people and how they think and how they trade and all that other sort of stuff by teaching stupid shit like Bollinger Bands and Fibonacci and all that other crap. A bachelor's degree in physics, almost a minor in math. 33 years as a software engineer. 40 years in real estate investment. I know a little bit about this stuff. And I'm just here to tell you that none of the indicators work, because they're all back looking. They're all what happened in the past. You know, oh, a freight train just went by here. That happened in the past. So there's going to be another one right now, because there's a periodicity to freight trains, and you step on the track and you get mowed down. There is a way to trade, and you can win. I've proved that. In this year so far, I'm up $53,000, $56,000, and I started the year out trading 3 fulls and 3 and 6 fulls, and then I moved to 6 to 8 fulls, and I moved to 8 to 10 fulls, and now I've done some trades at 20 lots, and these last two positions that I put on were 25 lots, because the volatility was there. And I was able to use that volatility. But the volatility that you saw on that chart that was 5 minutes, you can't use that. Because if you try to use that and you grab a piece of it, you're going to say, if I would have just stayed, I would have. And the next time you'll stay, and it wouldn't have been I would have, it'll have been you get your ass handed to you. And so when you have periods like that, you step back and go have a cup of coffee, which is what I'm going to do after I finish this video. I'm not going to go trade. I'm not trading today, because that thing has to work itself out. Will there be a retracement to that move? Maybe. This could be the big fade. I don't know. And because I don't know, why would I want to trade? Even to take the chance of trading for 10 pips with a 10 lot position, that's $1,000. Why take that chance? Because it could go against me. Maybe I set my stop 10 pips. I lose $1,000 for the day. Why? guys, you have to be able to understand the difference between good volatility and bad volatility. You have to understand the reasons that momentum is created within the market, that it has nothing to do with news or Fibonacci numbers. It's economic order flow. And when you get these large spikes and these large movements, that's not economic order flow. That's somebody scrambling for the exit door. Hold on here. Okay. Guess who just arrived back? Hi, Bo! So that was the Bo dog returning from Sue taking him out for his walk. They probably only did a mile and a half or something today because it's going to be really hot. It's supposed to be at 85. Now that might not be really hot, but up here there's a lot of humidity, and so it's just miserable. So they're happy to get back, and they've returned. So what do you do? How do you deal with this? You would never have known. Nobody would ever have known that on a 5-minute time frame that price would have moved 107 pips. The only person that knows that or could pre-guess that is the trader that needed to get out of his position or to get his client a better price, or he was going to lose that client. Because look, if you've put $4 billion with somebody and say, hey, I don't sell this for more, I don't want those pounds that I'm buying to cost me more than this. And if you end up costing 3 cents more on that, man, that's a lot of money. He's not going to do business with you. So we can't worry about that. We can't worry about this stuff. So you either figure it out for yourself or find somebody that can give you an idea of what to do. And as I was mentioning before, these educators teaching these stupid indicators, Bollinger Bands and RSI and percent R and all this crap, it's just crazy. The institutional traders don't use that shit. It's only the retail traders. The institutions may use it to see what the retail traders are going to do, and they may fade them as a result of that. They don't use it for their own trading. So you could say, well, I'll just look at what the retail trader would do, and then I'll fade that and move in the opposite direction. But that doesn't do you any good, because it's not the retail trader that's controlling these price movements. It's the institutional trader. And you can't trade like the institutional trader. You can't think like him, and you don't have the money to do that. There is a solution, as I've said, and it has to do with who you are as a person, what's your appetite for risk, how much money do you have, how many lots do you want to trade, where do you want to get to in your trading, how often do you want to trade, what are the purposes for your trading, are you 50 years old? Because your purposes for trading at that age may be very different than if you were 24 years of age. What sort of economics do you understand, and can you bring that to bear productively within your own trading? How conversant are you in probabilistic analysis? If you're not so conversant in that, then you need to be taught in a different way. You've probably been brought up thinking indicators were the way to go, and you're reading stories about what was his name, Marcus, took $30,000 and turned it into $30 million. Are these things possible? Yeah, of course they're possible. Look, as a retail trader, I just made $26,883 yesterday. So it's possible. But you got to come to the table with a lot of money. I didn't come to the table with a 1 lot, a 2 lot, a 5 lot to make that. If I would have been trading with a 1 lot or a 5 lot, you know, I might have made $300. Whatever, $500. But the point is there are so many variables in learning how to trade this great market, this currency market, that you can't just go to some dumbass that's going to teach you Bollinger Bands or what the value of a pip is or any of that shit. It's just so sad that you have so much opportunity in front of you. And my watch time on my videos, I'll do a 20-minute video and I'll get an average watch time of 6 minutes. What are you thinking? What are these guys thinking? If you're here right now, think about that. Well, I don't have a lot of subscribers, and the reason for that right now, this is the 13th of July, 2022, I've got 330 subscribers, I think. And I've been doing this for over 2 years. Well, somebody who's been doing this for 2 years ought to have 3,000 or 5,000 subscribers. Well, I could do clickbaity thumbnails, and I could have my face all contorted with like this shit, and I could do 10-minute vignettes of here are the 3 ways that you could do X, Y, Z, and all the dumbasses, that's what they want to see. I'm making money, and I'm doing it the right way because I spent 40 years as a real estate investor. That's a long-term trade. And now I'm trading on a 5-minute chart, and I'm making money. I made money in real estate, and I'm making money in this. Now, because I had a bad education when I started, I was relying on these folks to show me what to do. They're not showing you what to do. That's why 90% of the folks fail. Are 90% of the traders that fail, are you stupid? You're not stupid. You're getting the wrong education. That's it, 100%. When I started investing in real estate, a friend of mine who was a karate student was also a real estate broker. And I used to park my ass at his desk for 2 or 3 hours a day. They almost wanted to hire me. I didn't want to do retail real estate brokerage, but I wanted to know what the game was. And when he said, when you're looking at a building, these are the main things that you look at in order to go back to look again to see if it's worth it. And this is how you read the P&L spreadsheet. And this is what you're looking for. And if you're looking at a foundation, this is what you're looking at. And if you're looking at a roof, this is what you're looking at. And if you're looking at a commercial property as opposed to a residential property, these are the things that you want to be concerned about in the commercial property that you're not going to be concerned about in the residential property. And all that stuff was true. It was true. And so I made $1 million, over $1 million. In fact, I lost $1 million twice due to economic collapse in the real estate market. I didn't lose any of my assets because I didn't want to lose my position, because I understood the rules of the game. I get this. I understand the viability of the currency markets. I'm not doing real estate now. I sold my last building 2 years ago, and I've said on many of my videos, if I was 23 or 24 years old today, back then, knowing what I know now, I wouldn't go into real estate right now. Now, maybe there'll be an environment where real estate's a viable investment again because it goes in waves. But I wouldn't be in real estate right now. And not because the prices are high. That has nothing to do with it. It has to do with the asinine building codes and little small-minded people that are working in town governments, that the only way that they can validate their lives is by pissing on the people that have money that are trying to buy real estate and improve the town. It's just crazy. That's one of the main reasons. There are others, but I'm not teaching real estate here. And I'm not even teaching currency trading. That's not my business. I'm not in this to have a training program, a training course. I've written courses, 400 pages. I'm working on a advanced solutions course right now. But I'm not doing it for you. I'm doing it for me because it helps. I enjoy writing. That's what I do. I've written 30 books, and I haven't sold anything. I haven't marketed them because I don't like that. I don't like the market. I just like to write. And I'm not particularly interested in teaching currency trading because there's so many people that are going to whine and complain, oh, this is too tough and I don't want to do this, and then they're going to try to blame me for their failures. Well, they're not, because I'm going to teach them the straight scoop stuff, and they're going to say, I'm not able to do this, but I'm not going to blame me. I've been in karate 55 years, and I still have students that I'm working with. And it was hard work. That's what you have to put in. You have to put in some hard work in order to achieve anything in life. And there's certain principles that any skill that you're going to develop are based on. And there's a path that's efficient that you go through, and there's a path that's not efficient. Trading high volatility where you get 107 pips. Well, if you didn't get caught in it, you shouldn't be going in and trying to take advantage of the reversal or the continuation or the Bollinger fucking Band or whatever it is that you're going to be looking at. You just go have a cup of coffee. And if you're looking at the situation that I was looking at last night, saying, I might be able to get 15 pips out of that, I didn't go into the trading platform because the conditions there didn't feel right. Now, if I had seen that pattern early in the day when I would be able to sit at my trading desk and watch that and react to it, not set fucking limit orders, but react to it, that might have been another case. But I'm sitting there watching a movie with Sue, and I don't want to be trading. Be very aware of those instances on the charts that you're looking at for these anomalies, these of price movement, these huge moves. And a lot of them won't have a pin bar associated with it. They'll just be a frickin' 100 pip candle or 2 5-minute candles that will give you that. It doesn't necessitate that you have a pin bar on it, okay? Now, when you back out to the 15-minute or the 1 hour, you may get a pin bar out of that. See, it all just depends on what time frame you're looking at. There's so few things in the currency market that you need to look at, because if you expand your scope, your view beyond that, now you're into somebody else's game. You're into the institutional game. You're into the stupid retail traders who are just throwing shit against the wall, and you're in a battle that you can't win. It's like if you just learned how to swim and you go jump in the pool with the Olympic swimmers. You're not going to be able to compete with them. You're not even going to be able to swim with them. They're going to drown you. They're just going to swim right over you and push you down underwater. You're just a turd floating in the water to them. And that's what we as retail traders are to the institutions. We provide liquidity for them in the wrong sense most of the time, right? And so you don't want to be liquidity. You want to be moving with the wave, not being overpowered by the wave. I have a course, it's really more of a seminar, but it's the mathematical aspects of currency trading. And it talks about the mathematics of waves and periodicity and amplitude and blah, 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 and all that other crap that makes 99% of the people throw up. But again, I didn't write it for 99% of the people. I wrote it for me so that I could correlate my theories into some kind of a concrete methodology. And it isn't that I use that. I don't need that. I'm just observing something and am able to describe that as someone who has physics background and a math background. Do you need to have any of that? No. No. In fact, I'd rather that you didn't, because the more technical of the background, you'll take that 107 pip 5-minute candle and you're going to try to figure it out. You know, I'd rather have somebody who's a graphic artist or a carpenter or a plumber or somebody who could visualize stuff and look at that and go, huh, man, isn't that cool? Well, I don't think I'll trade today. If that's you, throw me an email. Maybe we should talk. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.